Welcome back, Adam here from Go Simple Tax. Today I'm looking at how double taxation works, including an example of how to claim tax relief when your income is being taxed twice. Before we get into it today, don't forget to like the video and subscribe to the channel for more helpful tax content. Double taxation occurs when the same income is taxed by two different jurisdictions. Now, this often happens when you are tax resident in one country, but then you have income arising in another country. In this scenario, the country in which you are tax resident feels that they are entitled to tax your income because they lay claim to you as a taxpayer. But the country that the income arises in also feel entitled to tax the income because, well, the income is being generated in their country, and so they have a claim to the income itself. An example of this would be someone who is tax resident in the UK but has dividend income arising in Spain. Both the UK and Spain would likely want to tax that income, and this is where double taxation can apply. Double taxation treaties are agreements between two countries designed to avoid double taxation on the same income. They outline which country has the primary right to tax certain types of income, such as employment earnings, dividends, and rental income. Essentially, they're there to ensure that you don't pay tax twice on the same earnings and can instead focus on what is owed to each jurisdiction fairly because it's already been decided and documented. You can find details of all the UK's various tax treaties on the gov.uk website. If there's no double taxation treaty in place between the UK and the other country, then tax relief may still be available via something known as unilateral relief. This works by giving the taxpayer a foreign tax credit up to the value of the foreign tax already paid, although this is limited to ensure that no refund can be obtained where the foreign country taxes you at a higher rate than the UK. It's worth pointing out that unilateral relief can also apply where there is a double taxation treaty in place, but that treaty doesn't cover the category of income or foreign tax that's involved. The agreement that the UK has with the US is a good example, as it only tends to cover federal taxes and not taxes at the state level. So in this situation, unilateral relief is actually available for many of the state taxes. Okay, now in order to actually show you how to claim a foreign tax credit, I'm going to refer to HMRC's guidance. So this is the full guidance on relief for foreign tax paid, the 2025 version. And I'm going to use an example that's detailed in here to plug into the Go Simple Tax software that I'm using in order to submit the tax return and the foreign pages and claim that foreign tax credit. So if I switch back to the guidance and I scroll down, I'm going to find example number 2. So I want to use this one, and it says, if we just read through quickly, Zoe's total income is £52,000, comprising self-employment income of £48,000 and then £4,000 of foreign interest. The total UK tax due for 2024-25, which is the year that I'm looking at, is £8,032. She wants to claim foreign tax credits on the foreign interest as tax of £300 was paid on this income overseas. Zoe will need to record this income and the tax paid on page F2 of the SA 106, which is the foreign income pages of the tax return. Zoe's income without the foreign interest is £48,000. The tax due on this amount would be £7,086. The UK tax due on the foreign interest is therefore £946. So what they're doing, they're calculating the tax with all of the income in there, then they're taking the foreign interest income out, recalculating, and the difference is the tax. So £946 is greater than 300. That means she's not going to be restricted in any way. If she had been taxed £1,000 on the foreign interest, then she would be restricted to recovering the 946 because that's what the UK is charging. It can't give relief on tax it isn't charging. And it says Zoe needs to include this in box 2 on the SA 106 so that the £300 will be deducted from her total UK liability for 24-25, and it should leave 7732 due. So if we follow this through and plug these numbers into our tax return, I'm going to show you how this works. Now, I have pre-populated this with the self-employed pages. However, if you earn 48,000 from self-employment, yes, you are going to pay tax, but you're also going to have to pay national insurance. And in this example here, they're not talking about national insurance because you don't get any foreign tax credit for national insurance. So they've ignored it here, which means if I plug the numbers into these pages here, they're not actually going to agree back. So to make this work, what we'll do, instead of using self-employed pages, I'm going to add new page and I'm going to go for employment. I'm going to put in an example, and I'm just going to enter the very basic, the minimum information, and I'll remove the self-employed pages. So if you're using Go Simple Tax, which you can do, by the way, just by signing up with an email address, you don't have to pay anything initially. You can get a freemium account, you can enter all of your information in here, and then you only actually pay when you come to submit your tax return. Once you upgrade to a paid account, you also unlock a bunch of additional features such as tax tips as you're working through. So AI will be used to generate suggestions and tax tips for you as you enter your income and point out areas of the return that you might have missed or reliefs that you might be entitled to. You also get access to the support function down in the left hand side here and the support team that contains ex-HMRC agents. If you have any issues, they can also help to point you in the right direction. Now, in terms of removing the self-employment pages, I'm going to click on that one because I don't want to use that one anymore. And then I'm just going to delete to remove it from the tax return. You see on the left hand side, it's now been removed. So I'm going to enter my 48,000 as employment income so that the numbers agree back and national insurance isn't considered. I'm just entering the absolute minimum information here. So we're going with 48,000 of income. I'm not going to enter any tax already paid because I want the full liability to show in here for our example, and I'm going to save that one. So now we're showing 48,000 of income and a liability of £7,086. This tax liability here is a live calculation. So as I enter additional information, this is going to update in real time, which is really handy. Now that £7,086 liability will hopefully agree back to the information in our example. So it says here Zoe's income without the foreign interest is 48,000. The tax due on that would be 7,086. So that does agree back to the stage that we're at the moment. The next step is to add the foreign income. So I'm going to click on new page, and then you can see in here we've got the list of all the pages that are available. So I want to go with the SA 106, which it clearly tells you is for foreign income and gives you some examples below. I've selected that page, and again I'm just going to keep this very simple and enter the bare minimum. Was I able to transfer all of the overseas income to the UK? Yes. I don't need to provide any additional notes. Enter the total foreign tax credit relief in your income. Now I'm going to leave that blank for a moment or with a 0 in. However, we will likely circle back to this one in a moment once we're happy that all the numbers agree back to our example. And then loss brought forward, I'm going to leave blank. So happy with those tailoring questions. Now I can add my income. So if I click on the plus sign, I can choose a category then. So this was interest income. So we're looking at investments, and it says interest or dividend. I can put a description if I want to. Again, I'm just looking at the absolute minimum here. So interest and other income. The country code for this one. Now, we haven't actually said where this income was from, nor have I checked whether Malaysia has a double taxation agreement. We're going to assume for this example, there is no double taxation agreement between the UK and Malaysia for this type of income. If there was a double taxation agreement, then because this is interest income, it's quite likely that that would be covered in the agreement, and in which case I probably wouldn't be able to claim unilateral relief or a foreign tax credit in this way, because one of the two countries is going to be entitled to that income. So if it was the UK that was entitled to the tax income as set out in in the double taxation treaty, then HMRC are not going to give you a foreign tax credit, because they're going to say, well, you need to go and get that tax credit from Malaysia because we're actually entitled to this money and it's set out in this document. If the tax treaty states that Malaysia is entitled to tax interest income, then again, HMRC are not going to give you a tax credit because they're going to say, well, we're not taxing you as per the tax treaty. So we can't give you a tax credit if we're not taxing you. So again, just for this example, we're assuming that there is no tax treaty between the UK and Malaysia. I can then enter the amount of interest. So in our example, it was £4,000 of interest. The foreign tax paid, I'm going to leave blank for a moment. The foreign tax paid, I'm going to leave blank for a moment. And then no withholding tax or UK tax paid yet. Do you want to claim foreign tax credit relief? So you can see this is where we'd need to start entering some information. Again, for the moment, I'm just going to leave that one to make sure that our numbers agree back to the example. Is the income unremittable? No. So I'm happy with that for the moment. So I'll save, and then our tax liability should update in real time. So £8,032. So we've got our self-employment income in, we've got our foreign income in, and a tax liability of £8,032. If I switch back to our example, you can see that total income 52,000. The total UK tax due is 8,032. So at this point, again, we're agreeing back. I'm just going to head back in here. So if I click back into the income and edit this, and we'll add in this foreign tax paid, and you'll see what's going to happen here. So the foreign tax paid was £300. So I've entered that in the box. I'm going to save, and this is going to update. We've now got a tax liability of 7912. So what you'll notice here is that 7912 doesn't agree back to the figures in here. So we're actually expecting, come the end of this, a liability of 7732. So what's actually happening here is the foreign tax credit isn't being applied yet. What HMRC will do, they'll say, well, okay, you received £4,000 of income, but you had to pay £300 of tax. And even before a tax credit is applied, well, they're not going to tax you on money that you didn't receive. You didn't receive that £300, so they're only actually taxing you on £3,700, and that's why the liability has dropped down slightly there, but still doesn't agree back to our example. So in our example, the figure we're looking for is 7732. To get to that, what I'll need to do is head back into the tailoring questions. So if I click on edit up here next to the SA 106, and then I can enter the total foreign tax credit relief on this income. So that amount is the full amount of tax paid, £300. I'll save. My tax liability has updated again, so we're showing 7612. That's actually a little bit low now, so the example says 7732 and we've got 7612. That's because we're only part way through applying this tax credit. So the final step is to head back into the income and then click, do you want to claim foreign tax credit relief? I'll click yes in here. So by doing that, it's going to forget about deducting £300 off of here. And it's just going to apply the £300 as a tax credit. At the moment, it's deducting £300 off of the 4,000, and then it's applying the tax credit as well. So you can't do both. So I'm going to ensure that I've ticked this box here so that we're applying the tax credit to the £4,000 gross amount. I'll save. And our tax liability now shows as 7732, which agrees perfectly back to our example. From here, I can then progress through the tax return, add any additional pages that I need to, and report any additional income, read through and act on any tax tips and advice that the software provides, and then submit my return to HMRC. That was double taxation and an example of how to claim a foreign tax credit. I hope you found that useful. Thank you for watching. See you next time.